Hey everyone, welcome back to Corporate Decoder, the place where we dig into those big company reports so you don't have to. And today we are looking at a fund that, let's just say, isn't exactly knocking it out of the park. Their portfolio turnover is shockingly low. Scroll Certified Shareholder Report of Registered Management Investment Companies / Scroll. We're diving into the Asset Management Fund's Large Cap Equity Fund Semi-Annual Report. This is basically a check-in to see how this fund is doing, what they own, and what it all costs. The report covers the second half of last year, so July through December of 2024. It includes large cap equity fund Class AMF and Class H shares. First off, what were the fund's expenses? Because everyone wants to know how much they are paying to have someone else handle their money. For a hypothetical investment of $10,000, the costs for the large cap equity fund Class AMF under the ticker symbol IICAX were about $78. The costs are what percentage of your investment? 1.50%. For Class H with the ticker symbol IICHX, the expenses come down to $72, which is 1.39%. Moving on from the expense ratios, some of the other important fund stats are the amount of assets the fund has, which is about $51.4 million, and the amount of stocks they own, which is 51. Here's the real shocker, the portfolio turnover rate is 1%. This is the percentage of the fund's holdings that have changed over the last 6 months, so 1% is extremely low turnover. They aren't doing much. Now let's talk about where this fund's money is invested. Think of it like a pie chart of different industries or sectors. The biggest slice goes to information technology at almost 30%. Next comes financials at 17.6%, followed by consumer discretionary, things people want but don't necessarily need, at nearly 11%. Then you have healthcare roughly at 10% and communication services at 8.3%. This shows you what the fund thinks will do well. Scrolling down, let's look at the actual stocks this fund is holding. We need to dive into their schedule of investments. Basically, it's a list of everything they own. It shows the name of each company, how many shares they have, and how much those shares are worth. It gives you a clear picture of where your money is, well, the fund's money is. The largest holdings are in some pretty well-known companies. For example, they've got Apple shares worth over $2.2 million, Microsoft shares worth over $1.8 million, Amazon is missing, but they do own Alphabet, Google's parent company, and that is worth over $2.1 million. Now let's check out the fund's performance. It's not enough to know what they own, you need to know if they are doing a good job, which involves looking at the statement of operations. For the 6 months ended in December, the fund's total investment income was around $443,000, but they also had to pay expenses. Their biggest expenses were investment advisory fees, about $169,000, administration around $63,000, and distribution costs for the Class AMF shares around $54,000. After all the expenses, they ended up with a net investment income of about $57,000. But then, they also had some realized and unrealized gains from their investments, which boosted their overall change in net assets to over $3.2 million. This means the fund made money, mostly from investments going up in value, not necessarily from dividends. So how have these investments been paid to shareholders? The fund has different classes of shares with varying results. Looking at the large cap equity fund Class AMF shares at the beginning of the period, the net asset value, or NAV, was $11.20 per share. After income, gains, and distributions, the NAV ended at $11.24. In other words, not much change. For Class H shares, things were pretty similar, starting at $11.12 and ending at $11.15. These numbers really drive home the point that this fund is not doing much. Now, what's my take on all of this? The large cap equity fund seems to be sticking to the basics, investing in big-name tech and financial companies. Their expenses seem reasonable. However, the portfolio turnover rate of just 1% indicates a pretty passive approach, which may or may not be a good thing depending on what you are looking for. It shows a lack of active management. It is also very low. One thing to note is that despite having names like equity fund, they do hold a position in a treasury portfolio. Treasury bills are extremely safe debt instruments issued by the US government. This is a way to temporarily hold cash, but it seems inconsistent to hold over $2 million in government debt as part of an equity fund. Overall, I'd say the fund is pretty stable. But if you are looking for high growth or someone to really shake things up, this might not be it. If you are just looking for a place to park your cash in a diversified group of large companies, this fund could be worth further consideration. So what do you think? Is this the kind of fund you'd invest in? Let me know in the comments below, and don't forget to like and subscribe for more corporate deep dives.